You're a foreign executive coming to the US on the L-1 visa. Do you know the three most important considerations? L-1 visas are granted to foreign executives or managers coming to the US, which means there's a foreign office or foreign company and they have a US branch, and they send these executives or managers or specialized workers to come and work in that office. They generally classified into two. L1 is L1A is manager or the executive officer, and then L1B is an individual with specialized skills still coming to work in the office. Now, in terms of the validity of these visas, you initially get it for 3 years, but the LA can be extended for up to 7, and the L1B can be extended up to 5 years. And this is critical for what we're going to address. But if you have, legal or immigration questions around that, those are best addressed by an immigration lawyer. But now let's talk about the three most important financial and tax considerations if you're coming to the US on the L1 visa.
Yes. Considering that a foreign executive who is here on an L1 visa can be here for a pretty longish period of time, then these are three broad areas of what we think you should consider, and these are really important to know. The first being the U.S. income tax filing and compliance, and then the compliance with foreign financial assets and other assets. And then lastly, but not the least, is U.S. estate and gift tax considerations. So, as always, let me jump right into the US income tax filing and compliance part of it, which, as you know, when you become a tax resident in the US, you must declare your worldwide income and financial assets. And as an L1 visa holder, you are subject to that as well. So, what are the considerations of that? Timing your arrival. That can make a difference. If you're coming in the beginning of the year, then, you have to take into account what that foreign income and assets are for the entire year versus towards the end. Doing pre-immigration tax planning, that would mean working with advisors on both sides, both in the US and in the country where you're from, maybe look into investment reorganizations. And if you're married and if your spouse is going to come here with you to the US or not, they are coming to the US, then they are allowed to work here on a dependent visa. But if they are not, then you have to factor in their status for tax planning. And you should always think about what could change if your non-US spouse at some point might join you in the US. So keep all of those big picture things in mind. So we did timing, pre-immigration tax planning, the spouse. And another important thing to consider when you're looking at timing your arrival is your substantial presence test. And we've talked about this in a different episode, and we'll link it in our notes. And, meeting this test may mean filing a Form 1040 and disclosing your worldwide income for the entire year. Also, to check whether you would be eligible for what is called a closer connection exception if you are in the US for lesser than 183 days and maintain a tax home elsewhere. A dual status filing based on the amount of days you're in the US versus you were still abroad as a non-resident alien, and always looking at the treaty or the double tax avoidance agreement between the country you're a resident of and the US to see what clauses are available to you to maybe mitigate some of all of these or help you with your tax planning. So that was the first thing that you should consider.
You've addressed a lot in this one thing. So what I'm going to do is I'm just going to jump into point number 2. So this is your foreign financial and other overseas assets. You've already alluded to the fact that once you become a US tax resident, you're subject to US taxation in disclosure. And so the thing you want to be thinking about as far as your foreign assets is, one, do you have bank accounts, check balances? Do you have accounts where you just have signatory authority in FBA and FATCA thresholds? We joke a lot about you're in the US, your cousin adds you to a bank account somewhere overseas, and right there, you need to start reporting that account. So it's getting very clear on what your assets are. Check on your retirement account. And actually, this is both here and overseas. So you want to understand access. On the US side, you're thinking more what's your goal, your end goal, as you think about what accounts you want to get into, what are the rollover options, and of course, the US tax treatment. Again, a lot of this, I know sound like I'm confusing the two. It's your overseas accounts, but also the US accounts. Think about your investments. You want to review your investment accounts. And the biggest danger or consideration on this is what we call PFIC, passive foreign investment companies or accounts. So if you end up with a PFIC, and pretty much almost all foreign based or foreign registered mutual funds fall under this, your tax filing that Manas just talked about at the beginning is going to be a lot more complicated. So you really want to examine those accounts, find out what's going to fall under PFIC filing, and come up with a game plan for treating this. And this, of course, includes even things like your foreign insurance, right? You need to think about your digital assets, your crypto. What are the reporting and taxation requirements? Again, because they are overseas and you're expected to report everything. If your company is going to be giving you equity compensation, so things like RSU, stock options, you really need to be thinking about taxation and the treaty implications. And again, how they end up being treated depends on how long you're going to be here. I know it's not an easy thing to figure out as you're arriving, but also where you're going to go when you leave and when these things vest. So there's definitely a lot to be thinking about. If you have business holdings in foreign countries or foreign companies, you need to take this into consideration. We need to think about your foreign income. And overall, the goal is we need to plan to be doing not only your tax returns on foreign income, which needs to be reported in the US, but most likely you'll need to continue filing your taxes in the foreign country. We obviously cannot file foreign taxes for you, but the goal is take all that into consideration, start putting a plan together for how your overseas CPA or EA is going to work with your US cross-border tax professional, because it's really the only way you can get all this under one roof and sort of streamline it. Manasa, before we jump into 3, anything else you want to add to that?
Yes.
Okay.
You know, the foreign financial asset compliance, and we keep talking about this in our episodes, you know, non-compliance or failure to report these come with humongous penalties. And just dealing with that can become quite a cumbersome affair. So understand what Jane just talked about, and all of those assets that you have, know that they have to be declared if the amounts are past the threshold. So working with professionals on both sides of the border is an extremely important thing to remember. Jane and I just cannot reiterate that enough. So that being said, you know, moving on to the next biggest implication or aspect of moving to the US as a foreign executive, we talk to wealthy or high net worth executives moving to the US on L-1 visas a lot. And we understand that you've already probably have a big financial footprint in the country where you are. You have been living and working there for, you know, n number of years. So we expect that you will have high net worth investments. So going back to the aspect of planning for how many years you'll maybe in the US, you'll be in the US, sorry, and what your future plans are. That determines our next part, or the next big part, which is the US estate and gift tax implications. So gifting can kind of take on its own ramifications. If you are getting a gift from a non-US person, going over certain thresholds is reportable, or if you're giving gifts to non-US persons, then that might entail gift reporting or gift taxes also. So think about that. Think about maybe setting up what are called blocker entities to organize your foreign assets and protect them from US taxation and compliance. There is such a thing called a step up in basis, and we won't go into it too much because that in itself is a entire new episode. But step up in basis is an option that you should explore for your foreign investments. And Jane already covered this, and I will say this briefly. If you have holdings in foreign entities, then that needs compliance and declarations. So look at that and see what you want to do with it, where it's going, and how big a part of your tax and financial plan your business holding is going to be. So you may need to plan for that as well. And of course, the covered expatriate status, if you're going to switch to a green card down the road, all of that come into the long-term goals and plans on whether you want to stay here in the US or go back to your country down the road, and how much of a footprint you already have in the other country and what you want to keep, really. That's kind of what is something that you have to keep in mind no matter what you do, of course, but it gets to be really important if you are a high net worth foreign executive coming to the US on an L-1 visa. Anything else you would like to add, Jane?
So we have those 3 points. I think the bottom line is, before you actually get to the US, work with a tax advisor, financial planner, cross-border financial planner, cross-border tax advisor, to get all these things into place. Because if you wait until you get here, it might be too late for some of it. But if you're already here, let's make sure we fix these 3 things, fix everything by addressing those 3 key points. But I think in terms of that, we've addressed the 3 main considerations. So yeah, I think I'm good there.
All right. So thank you, dear listener, for tuning in and listening to our episode. Don't forget to subscribe for more insights. We have a newsletter. We'll send it to you as soon as a new episode drops. So until next time, stay informed and be prepared. Thanks for listening. Bye.